There is a quiet vulnerability built into Bitcoin's design. A significant portion of its total value sits on addresses whose public keys have been exposed. At current prices, that is an enormous sum, effectively left in the open. It was not always this costly. Back when Bitcoin traded at far lower levels, Ledger's research arm, Donjon, identified millions of coins in this state. That was worth a substantial amount then. Today, the same coins are worth vastly more. The risk did not grow, the price amplified it. Exposed keys do not mean stolen funds, but they lower the barrier for advanced attackers. Quantum progress makes that barrier thinner. This is not a prediction of collapse, it is a map of pressure. For anyone holding Bitcoin, this is the quiet part of the balance sheet, the part no one wants to audit, yet everyone depends on ignoring.
Bitcoin's design favors concealment. Most addresses, P2PKH, P2WPKH, P2TR, hide the public key behind a hash. It stays buried until the moment a transaction is spent. Then, in the script sig or witness data, the key appears. That single reveal is permanent. The blockchain never forgets. Once exposed, that key becomes a fixed point in the ledger's history. Address reuse compounds the problem. A key spent once is visible forever. Legacy formats like P2PK skip the pretense entirely. Their keys were public from day one. This is the quiet vulnerability, not a flaw in the cryptography itself, but in how the system's records accumulate. Every exposed key is a door. It doesn't open today, but the lock is known. Over years, that visibility becomes the main vector for long-range risk. Privacy here isn't a promise, it's a timeline. That concealment is also a liability. An estimated 1.1 million Bitcoin from the Satoshi era remains in old formats, many with exposed or recoverable public keys. In cryptographic terms, that is a door left ajar. A public key alone isn't a signature, but it is a starting point. The margin of safety narrows when the encryption itself becomes the target. Back in 2025, Tether's CEO, Paolo Ardoino, made this explicit. He stated that quantum computing might unlock billions in trapped Bitcoin, including Satoshi's holdings. That quote still circulates today, and it frames the quiet paradox of this market. The same opacity that protects these coins is what makes them vulnerable. If those keys are ever broken, the supply shock would be absolute. This isn't speculation about price. It's about the finality of a ledger that never forgets a balance and never forgives a compromised key.
The distinction matters. In April 2025, a researcher in Italy did use a publicly available quantum computer to break a key. But that key belonged to a simplified, reduced-order elliptic curve. It was a genuine proof of concept, Shor's algorithm running on real hardware, yet it was not the full SECP256K1 curve. Bitcoin's actual cryptographic foundation was never touched. As of August 2026, no real attack on the complete SECP256K1 curve has been reported. Only those reduced curve demonstrations exist. So the theoretical threat remains theoretical. The hardware is advancing, but the gap between a controlled experiment and a network-scale exploit is still vast. That gap is where Bitcoin currently lives. It is not invulnerable. It is simply not yet proven broken. For now, the cryptography holds, not because it is perfect, but because the practical attack has not arrived.
The timeline is shorter than most imagine. As of 2025 and 2026, assessments from DARPA and NIST have been explicit. They indicate that significant quantum threats to public key cryptography could materialize in the 2030s, not realistically before 2030 for 256-bit ECDSA, but the window closes fast. The expert consensus points to a non-trivial probability. A state-level or big tech actor could recover private keys from these curves between 2029 and 2035. That is, if current hardware roadmaps hold. Notice what that means. The cryptography securing digital assets today has a projected shelf life. It is not a question of if the math breaks, but when the machines catch up. For anyone holding value across that boundary, the risk is not abstract.
It is a countdown. The security model of the past decade is becoming a historical phase. The transition away from it is the only rational response. The hardware race is running on schedule. IonQ's updated roadmap from 2025 targets 1,600 logical qubits by 2028. That is not a distant aspiration, it is a concrete engineering deadline. Their ambition extends further, reaching 80,000 logical qubits by 2030. IBM's trajectory is similarly defined. As of their 2025 roadmap, which remained on track through 2026, they aim for 200 logical qubits by 2029. The early 2030s should see them surpass 1,000. Back in November 2025, IBM announced new chips and software targeting quantum advantage in 2026. That milestone has arrived. As of August 2026, they remain on that trajectory, having demonstrated lower logical qubit error rates. The significance is clear. These are not incremental improvements. They are the structural foundations for fault-tolerant computation. When error rates fall and qubit counts rise, the cryptographic timeline compresses. The question is no longer if these systems will mature, but precisely when their capacity outpaces our defenses. The clock is set by these roadmaps, not by speculation.
The hardware race is running on schedule, but the market's attention is shifting to a quieter front, the ledger itself. As of 2025, BlackRock added a quantum computing risk disclosure to its Bitcoin ETF prospectus. The language is direct. Advanced quantum systems could undermine the cryptographic security underpinning the asset. That disclosure remains in place today. It is not a footnote. It is a warning stamped into the filing. Then, in early 2026, Coinbase formed a dedicated advisory board to examine quantum risks to blockchain security. Two institutional pillars, one identical concern. This is what preparedness looks like when the timeline for fault-tolerant machines compresses. They are not predicting collapse, they are pricing the probability. The message is clear. The threat is no longer theoretical, and the entities managing billions are choosing to say so formally. For the ecosystem, this is the signal that maturity requires acknowledging the existential question, not avoiding it.
The ledger is no longer just a market concern. It has become a matter of state. As of mid-2025, more than 15 countries have published formal guidance for the post-quantum transition. The United States, the EU, the UK, Japan, South Korea, Australia, Canada, each one mapping a path toward 2030 as the major milestone for securing critical systems. That date is not arbitrary. It is the horizon where today's encryption is expected to break. Governments are not waiting to see if the threat materializes. They are preparing as if it already has. Then, in May 2026, the US government committed an additional $2 billion to quantum development, folded into defense and research budgets. That is not research for its own sake. It is an acknowledgement that the first nation to secure its infrastructure will hold a structural advantage. The hardware race captures attention, but this quieter front, the transition of the ledger itself, is where the real positioning is happening. The timeline is set, the capital is moving. The question is, who will be ready when 2030 arrives? The clock is ticking. As of 2025, Bitcoin developers had not agreed on a post-quantum fix. As of August 2026, that situation has not changed. Proposals exist in mailing lists and Bitcoin Core discussions, but development remains slow. This is not a hypothetical threat. It is an engineering deadline without a date. The problem is starkly physical. NIST finalized post-quantum signatures are considerably larger than ECDSA. Some schemes are dramatically larger still. Think about that. A single signature could balloon to many times its current size. Every transaction becomes heavier, slower, and more expensive to store on the ledger. The chain itself would feel the weight. It is a scalability crisis hiding inside a security upgrade. No one is saying the fix is impossible. They are saying it is hard. And the longer the debate continues, the tighter the margin becomes. The foundation is solid today. The question is whether it can be reinforced before the ground shifts.